Welcome to TradeTheMBI.com. This is John's report. It's for the 3rd of January, 2022. Well, we retraced to the ABM, as you can see clearly right there. We'll go ahead and put the ABM is at 47.54. The low was at 50, and immediately bounced off of that, and then gapped up a little bit higher. I mean, this isn't much of a distance, but currently plus 25 to start off the year, and you can see the complete drop of white MBI and the perk up of magenta MBI. All the things you need to see for a continuation to the upside. We're still positive, shakeout, rising, and a little bit of a discrepancy here on the DOC with the cyan finally rising a little bit, but with steel, short-term buyers lifting. Still consistent with the up move. YM, almost identical situation. Doesn't have the perk up of the magenta. Could see a little bit of softness within that setup. And then from an NQ standpoint, retracing likewise to its ABM. So identical movement, even though they're in different places relative to their all-time highs. So it's just, but there's a consistency with that. That's the point of ABM setups, as well as seeing it within the Fibonacci configurations. Likewise, shakeout looking identical. We had those positive extremes that began just before this one. This is the middle positive extreme, pretty much coming back to on that ABM, which is what filled at least the initial positive extreme down at 16,145 when we actually get weaker configuration or sell signals. Euro's been on a little bit of a tear, breaking out of its range, but still caught in that middle 113.5 range. Europe is not looking great in any stretch of the imagination, but it just shows how bad the U.S. situation is, that the euro is even where it is, because the dollar should be at parity or better, given the strength of the U.S. economy versus where Eurozone is completely. From gold standpoint, starting its climb, and that's expected. I would expect that to continue to move towards the 100% level there, and strong move back up on a shakeout, potentially for a positive extreme there. We'll see if it evens out during the day. That could be enough to keep that from moving into the red zone. From an oil standpoint, a higher upper middle portion of this range, it's still more inflationary pressure than not. That it's not breaking into new highs, some people will see as a relief, but it's going to mean that any idea of transitory, i.e. inflation and or costs, they're not going to change. It still keeps them elevated. You throw in wage pressure, and you've got a real stagflation problem building. Bitcoin broke down right before the close of the year, popped back up, post-market back up to the 50% level, and still positive from this configuration off the return right there. But this will be a real test, because now you've had it mature into real development, and we'll be able to really see whether or not there is going to be an add into it, or the flexibility of its usage kind of set up. In the same situation with Ethereum here, with it also gapped up. We saw the rising buy setup towards the end of the day after the big decline. It just brought it all right back up to it. So you had just year of end repositioning, and then right back to the same spot, but still below the 4K number. And again, this is going to be another similar situation to watch and see how that development takes place. But we've been beautiful with the readings on it, so I don't see it as being a difficult setup for us as far as that goes. So after that huge run up buy, we had a couple little minor flat trades in between, a little minor dip on the 1 GAM that held it a little bit longer, but bought back in at the dip, and kind of flipped around. And that's kind of where that awkward reading setup here, where you have the white moving above magenta, then turning around pretty quickly. So we'll see if it's able to sustain itself in that. But we've got rising lows, which really does pull some pressure down since we haven't made any new highs. So this really has to come up and make new highs, otherwise I would expect it to fill back. From a 5K standpoint, well, you can see the day fits within there, and it was just pretty much back and forth range, mostly to the downside. We had plenty of sell signals that took place at the peaks of each of those moves, and it just kind of held flat. We finally broke down with some little anomaly setups like this skyrocketing of MBI red that particular stage, quite unusual. Where we currently are right here up at the peak with positive extremes, it's just basically filled that back in place. We'll see if there's a crossover at this particular point, but within the softness here, it's still bullish until you get the cyan moving above green. We got a full reset of steel coming up from the bottom, so it just may take market players coming back into it to continue to drive that. We'll see if it decays further. If we get a DOC spread with the cyan moving above, that would be the earlier indication that we might see a little bit more of a fill back. We had all the way from the gap up, so that would be all the way at 47.70 from a fill standpoint, coming back. And failure to get back up over 4,800 would be kind of problematic. I think you'd start to see some people getting a little bit concerned if you're not able to break out past that after this second attempt to push towards that 4,800 number. So it's interesting to note. As always, though, I will keep updating you on the Skype chat. Trade well. We'll talk to you later.